subject has its roots way back in 15th century. But the subject started gaining traction only by 1900, especially after the mid of 1950s. Earlier, the subject was discussed as a section, as a part of financial accounting. But now, the subject has grown so big, which requires a minimum of 1 year to understand the length and depth of this particular subject. So it largely discusses about the time value of money, one of the building blocks of financial management, the sources of funds, the mergers and acquisitions, capital structure, raising capital, financial derivatives, and capital budgeting. So in this session, we are not going to cover all of this. We are going to handpick some of the important topics that are prevalent in corporate finance. So in this session, we'll be discussing about what is corporate finance decisions, capital budgeting techniques. We'll be discussing about the capital structure and mergers and acquisitions. What is corporate finance? If you ask this question to different individuals, you would get different answers. Some people may claim that corporate finance is a part of financial accounting. Some people may claim that it is just an extension of financial accounting, or it is all about the financial modeling. Or some people may say that it is all about investment decisions and capital budgeting techniques. Though all these answers are correct, but none of these answers are giving you an appropriate picture of what is corporate finance is all about. Before we dive deep into understanding what is corporate finance, let us quickly take a real-time example, a real-time daily life example, so that it gives you a perspective. Let's assume that you want to start a business. Okay, so you want to start a business. Let's say it is a small manufacturing firm you want to start. With a limited number of employees, you want to start your business. What is that you need? What is that required for your business? It would be the idea, which is most important and the first important thing. You need to have a business idea. A business idea, when I say business idea, it would be a practical business idea or a feasible business idea, right? Then what else we need? We need skills to perform duties to succeed in the business. What else? The most important ingredient for business is money. Money is required for virtually everything in business. When we say money is required in the business, it would be for various reasons. For example, it would be to pay your suppliers, to buy raw materials, to pay your employees, to pay the stationaries, to pay the rentals. It may be for any reason. Now, money is required, inevitable for business. We need money. Without money, we'll not be able to start the business. Technically, it is not possible to start a business. But where do we bring the money? A businessman can find various routes to find this money, right? Because this money is not available free of cost. This is not in abundance. This is a limited resource which is coming with cost. For example, if 10,000 rupees need to be received from some external sources, it would come with its own cost. Now, when we say the money is important for a business, the same thing is true with a corporate also, with a multinational company also. They also need money for various reasons. For example, to pay day-to-day operations of the business, to take care of daily expenses, to pay salaries, right? To pay service providers, to import raw materials from various locations, to pay the rentals of the buildings, the assets, to pay off the existing loans, or it may be to acquire new assets. It may be any of these reasons. So, in that context, corporate is business, finance is nothing. It's all about money, a corporate finance. So now let us understand the definition